build our core positioning, which then protects us from going all in here, and then it pops here, and then we freak out and we react emotionally. Remember, emotion is your worst enemy. The markets will use that.
Hey guys, welcome back to Library of Wealth. Today we have financial analyst Gareth Soloway giving us the latest update on the Bitcoin market, as well as where he sees cryptocurrency headed in 2023. Today Gareth gives us the current trend he's been watching since November, when FTX sent shockwaves across the crypto market. That trend line now shows that Bitcoin's increase to the current price of just below $23,000 will continue to rise in the coming weeks. Recent data shows that even with a 40% increase just this month alone, Bitcoin holders are not taking profits. The increase in long-term holders shows strength and conviction in the market, and is something that Soloway believes will take Bitcoin to the next level of $25,000 and sooner than most think. Let's get right into the interview with Gareth Soloway as he gives his investment advice and price prediction for Bitcoin, as well as where the crypto and stock market is headed in 2023. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
I'm going to talk about Bitcoin real quick here. So let's get into Bitcoin and let's go here. Here's your dollar chart on Bitcoin. And again, I put in this longer channel. I'm just kind of curiously watching it to see. Longer upsloping channels do eventually break to the downside. But again, it was just something I was taking a look at there that we do want to keep an eye on as well. Now, short term, couple things to look at on Bitcoin here. So short term, we have taken out the FTX high. All right, now, again, whether or not we've confirmed, it doesn't really look like we've confirmed here, but we are consolidating a beginnings of a potentially bullish consolidation chart pattern, all right? So when you have sideways candles, that means a recent move is being digested. Think about you just went to the buffet, you had a huge meal, you go back, you sit in front of the TV, you digest your food. You're not gonna go run a marathon as soon as you eat the buffet, right? You're gonna get cramps, you're gonna feel disgusting, you're gonna throw up. So the same kind of principles here apply to charts. It's millions of buyers and millions of sellers coming together with their emotional kind of mentality, and they're buying and selling. That's how charts are created. So essentially, you can really relate charting to basic things in the human world. Okay, so again, big buffet eaten, now it's slowly digesting. I don't personally think it's digested enough, but it's starting to get digested. If we continue up, your upside is going to be 25,000. Now, 25,000 is a big level, not just for this pivot, but if we extend this line out, it also goes to that low right here, which was this last big drop low. So that to me is a big resistance. It's even bigger than where we currently are, which is at this pivot high, because it has a secondary pivot low here to kind of reinforce the nature of this resistance. So if we do go up, 25,000 to me would be an epically big level. Now for me, I haven't shorted Bitcoin yet. I do have shorts out there. I have two shorts out there on Solana as well as Ethereum in these ranges because the charts are looking more bearish, but they're also partial positions. And the idea being is that I want to essentially begin to accumulate for the bigger macro move to the downside that we probably get after this relief rally in asset prices. And by the way, going into January, remember I talked about this quite a bit in my interviews, in my daily analysis videos, both in verifiedinvestingcrypto.com as well as in the Money Stocks and Verified Investing Alerts, the idea of the January effect. The January effect, tax loss selling is over. You get an overabundance then of buyers versus sellers, and it tends to lift price up. So again, if that continues, I think 25,000 at 25,000 for me personally, I will probably start inching in on a short position. In the longer term, a couple things you want to just keep an eye on, looking at supports. Let's look at supports. So what if Bitcoin starts to roll over? This is a big trend line here, folks. Notice pivot to pivot to pivot all the way through here. So this little upsloping trend line would be a big one. And then if we do finally break that, which I do anticipate at some point, then this low pivot would be here. So short term, your upside is 25 potentially. If we start to decline and we start getting below this area, you start watching for this upsloping trend line. Now, interestingly enough, if we look at the DXY, take a look at this. When did the dollar top out? The dollar topped out in October or right going into October. So essentially what this is showing us is that as the dollar weakens, you're going to see upside in gold prices, and generally in commodities. If you look at the lows on oil, if you look at the lows on silver, it's generally going to coexist together in opposing directions. All right, now one of the things that's catching my attention here is this trend line right here on the US dollar. So what does this mean? Well, this to me is an indicator to be a little bit more on the cautious side of the stock market, maybe crypto as well here. And I'm going to explain. So what is very clear, and if you look at the stock market and basically we look at gold prices, we look at crypto, we know that as the dollar was rallying up, the stock market was selling. As the dollar has fallen, the stock market has rallied off its lows. So again, if you go back to the lows on the stock market, it's going to coincide basically with the highs on the dollar. If we're coming into support on the US dollar, and support generally means we could see a technical bounce in the dollar, the extrapolation of that needs to take us to the idea that the stock market may be getting a little bit tired. Okay, so again, that's the key to kind of understand here. All right, and again, I'm not saying that the dollar is going to go back to all-time highs. I honestly don't believe that. I think the dollar is probably topped. But I do think even just a technical bounce in the dollar, like just imagine if we just go back to even this area right here, which will be resistance around 103.75, that would be a catalyst for the stock market to potentially sell off. Again, I am short-term bullish on the dollar here for the next week or two, then we'll reevaluate. Therefore, for me personally, from these levels, S&P right now, Spiders is at 396.50. I'm going to be net negative. I'm accumulating essentially my portfolio. I'm slowly accumulating some shorts on the S&P, on the NASDAQ, with the full idea that we could have a short-term pop to squeeze weak hands out above that trend line I showed you. So again, when you're looking at swing trades, you start accumulating when the probabilities start to shift, in this case to the short side or the downside. We don't go all in here. We just kind of inch in. Then if it pops a little bit more, we inch in a little bit more. We build our core positioning, which then protects us from going all in here, and then it pops here, and then we freak out and we react emotionally. Remember, emotion is your worst enemy. The markets will use that. Think of the markets as a great white shark, and emotion is blood in the water. All right, you do not want emotion. How do you mitigate emotion? You mitigate emotion by essentially going small enough that you don't have that emotional reaction when a price goes against you a little bit. That's going to happen in trading. You need to learn to read charts and ultimately trust the charts and use your position size to mitigate your emotion.
With Bitcoin having its biggest weekly gain since February of 2021, many crypto investors are optimistic that we may have entered another multi-year bull market. Gareth Soloway is bullish on crypto prices in the mid and long term and still believes we'll see Bitcoin hitting $500,000 or more in the next few years. However, he believes that any permanent recovery from last year's damage on prices will remain to be seen until there is a massive tightening in the market. Soloway says that we may see that in the next 30 to 60 days if Bitcoin drops back down between $9,000 and $10,000. We'll also be keeping an eye on the Fed, as well as key indicators of an economic recession and drop in stock market prices, which are expected in the first half of the year. What do you think about Gareth Soloway's latest interview and market outlook for Bitcoin? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.